Good afternoon, guys. It's working, bringing you a quick update on Bitcoin. Hoping you guys are having a wonderful afternoon. We're looking at Bitcoin to the US dollar 4-hour chart on Bitfinex. And last time we spoke, guys, Bitcoin was operating within this wedge. I told you we were seeing a series of lower highs, higher lows, approaching the apex. I told you that the consolidation period was more than likely coming to an end very shortly. And I think literally within about an hour or so of my putting out that update, price broke down. I told you guys if price does break down, it was going to more than likely test this 6100 support level. We know that 6100 support is also the 618 fib level. In fact, if I pull this back out here, we just go swing low, swing high of this structure, of this larger structure. We can see that the 6100 lies perfectly at the 8865 fib level. Literally just overlaps it. So that we knew was going to be a very, very strong support. So again, as we zoom in here, I told you that we'd be watching for a possible double bottom. Price come down, bounce off, came right back up. It immediately took out this bottom, so that was no longer the case. Wicked back in. And immediately was rejected back up by the bulls. I told you that if we had a decisive break below 6,100, that we'd likely be coming down to at least 5,900, possibly 5,850 to test this demand zone down here. Price did break through, but not decisively, guys. By decisively, I mean if we have a 4-hour candle that opens and closes below this 6,100, that's a decisive break. We just had wicks come down here, wick come down here, and pushed immediately back up. And now we can just see sideways movement, almost creating these doji candles for the last couple 4-hour chart, or excuse me, the last two 4-hour candles have been dojis, and today, almost doji actually, not so much, but anyway, guys, we can see that this candle is turning out to be almost so far, kind of looks like a bullish spinning top, but we'll have to wait and see how this ends up playing out, guys. This obviously has another hour and a half left in this 4-hour candle, and it just looks completely flat to me. We're not seeing any follow through with volume. We're not seeing anything that would indicate a major bounce. Doesn't mean it can't happen though. So if price does end up coming off of this, if we do get a bounce up, I'm going to be looking for a reaction somewhere in this zone here. Okay, so we can see it wicked into this a few times, came back in, found support here, resistance here, support here. So this is a very relevant zone somewhere, call it around 6300, 6350, somewhere thereabouts. I do think price is going to come up. That's going to be a critical zone. If price does break north of that, I think there's a very high probability that we come up and we test this prior high of this microstructure at about 6630. And if it takes out that 6630, I think it'll be obviously I think it's going to come up, test this orange support, or excuse me, resistance. I've got that labeled in orange because that's a very, very important resistance to get through. That's the neckline of our inverse head and shoulders. That's also the 618 fib level. If we can get north of that, guys, then the momentum is going to shift back in favor of the bulls. I don't expect that to happen anytime soon, guys. Just let's just wait and see how it plays out. But just kind of give you an idea of what to watch out for, guys. We're going to be watching to take out this high here, 6630. Next zone to take out is going to be this 6775 to 6800 zone right here. 6750, somewhere thereabouts. To the downside, guys, I think there's a high probability in the short term we might see a rise up, bounce off this, come right back down to break through this 618 fib, or excuse me, this 6100 support, which would be the 8865 fib level. I do think there's a high probability we are still going to test at least 6,000, more than likely though, this demand zone down here. We're at wicked here, testing the prior lows of 5750, 5775, depending on your exchange. And I do think there's a high probability that we might break that low. I'm not saying it's going to. I just think there's a good chance that we might break that low, guys. We are seeing a lot of weakness throughout the market, guys. So, I mean, I'm not seeing any major trade setups. We are getting some mixed signals. If we come in here, we look at the 4-hour chart, guys. I'll pull this up here. Okay, looking at the 4-hour, if I go from our let's see, what was I looking at here? There we go. If I go from this point to this point on price, clearly that's a lower low. Okay. If I go from the exact same point, we look at our histogram. What do we have? We have a higher low. Okay, this is obviously a downtrend, so this is bullish divergence, indicating that temporarily it might be bottoming out. We're getting the same thing on the stock RSI. We also have the same thing on the RSI. Okay, it created a higher low. Okay, so that is hidden, or not hidden, that is bullish divergence. And you would expect there to be a bounce there. Why haven't we got that bounce? Well, if I come in here and I look at, sorry about that, guys, didn't mean to get rid of that. All right, guys, in the interest of saving time, I went ahead and zoomed into the 1 hour, got our indicators back, and this is on the 1 hour. We've got clearly a lower high that created here on price. However, if we look at our indicators, what do we have? This is, again, remember, this is in a downtrend. Looking at our 1 hour MACD created a higher high. Looking at the stock RSI on the 1 hour, a higher high. Okay, so that is clear divergence, and that is hidden bearish divergence, okay, because this is a downtrend. Okay, so if we look at the upside for hidden divergence, you look at whatever the opposite of the trend is, whatever side of the opposite. So in a downtrend, you look at the upside. We have divergence here. That would be hidden bearish divergence, indicating in the short term we would have another leg down, that price should continue to drop. So we've got conflicting information, guys, and due to that, we can see what price is doing. It's just it's conflicted. We've got it bouncing back and forth. Doesn't know which way to go. And eventually, this is going to get sorted out, guys. But it is very interesting. Shows you that we've got a lot of competing forces in the market right now, and the market makers are trying to figure out what to do. You know, I think price wants to go lower, but I think so many people have shorted this that the market makers would like to take out those short positions before they take price lower. So, you know, there's kind of conflict within the market. So if we come out here, we look at the larger, the bigger picture here, guys. I've kind of drawn something out that I find very, very interesting. Okay, if we this is on the daily chart. This bottom, this 54.50 is the bottom of this larger support. I do believe if we break below 54.50, there's a very high probability we're going to come down to this support zone. Doesn't mean we have to, and I'll give you a couple reasons as to why we might not here very, very shortly. But if 54.50 does break, guys, I think coming down to 4,600 is a real possibility. This 4,600 is going to be a very strong support. I do believe that if it gets this low, it will not get any lower than this 4,600 to 4,400 support zone. Say that because we've got the 786 fib level. If I go from the ultimate swing low to swing high of this entire structure, this large structure going all the way back to the beginning of 2017. If we take all that into account, the 786 fib level lies right on top of this 4,600. Actually, it sits at around 4,610. Call it 4,600 support. So we do know that Bitcoin loves to retrace deeply. We do know that the 786 fib as well as the 8865 fib often act as very strong supports, so I wouldn't be surprised to see it act as a strong support in this instant. And we also have it backed up by price movement. We can see this has acted as a strong resistance in the past, which means it should act as a very strong support going forward. And the 786 fib almost backs up that idea. However, it doesn't mean we have to go that low. So let's just kind of zoom in here and say, okay, so you know what would tell me that what would prevent it from going that low? Well, we have this massive ascending support. I've told you guys this a million times. It's been in place since 2017. I repeat myself sometimes, guys, just for the new people coming in. So we know that this massive ascending support could come down. We could see price break down, hit this ascending support. Depending on when that happens, it would be somewhere. If it was to happen right now, it would be somewhere in the neighborhood of 5,200, somewhere thereabouts. Possibly bounce off of that. That's a very relevant, very, very possible scenario. We also know that we have this support zone going all the way down to 54.50. That's a very relevant support zone as well, guys. If we could come down, hit that, we know that's a very, very strong demand zone between this 57.75, 54.50. So that's a very possible scenario. We bounce right off of that as well. Okay, let's look at this also from an Elliott perspective. And I know I've had some people ask me, what is my Elliott count? Well, I've showed you guys this a few times as well, but I'll reiterate. I do believe this was a 1, 2, 3, 4, and very extended fifth wave. We know that this is that oftentimes in an extended fifth wave, or if you don't know, anytime you have a very extended fifth wave, usually it's followed by a very lengthy correction. So obviously we have a very lengthy correction here, right? And how do we count this correction? Well, in my opinion, I think that we have. In my opinion, it's very, very clear. I think we've got an A, B, C. Okay, I think that's very, very clear that we it doesn't get any more technical than that. An A, B, C. So that would make this, and this obviously looks extremely impulsive, guys. I mean, look at how this just shot straight up. That's a very impulsive looking wave. Okay, so I do believe that this was an X wave. Okay, I do believe that this was a failed wave. And as soon as price dropped below the start of that wave, which was somewhere back in here, somewhere around 5,900, depending on what exchange you're at, as soon as it fell below that, which it did right here, this became a failed wave. This was no longer just a correction of that wave. This could no longer be counted as a 1-2. This became a failed wave. Okay, so if that's a failed wave, what do we denote a failed wave as? We denote a failed wave as X. Okay, so we'd be now technically in a WXY pattern. I've showed you guys this a million times. W, this would be our X, and we're looking somewhere for the bottom of Y. Okay, so to me, this looks like a perfect, and I've showed you guys this many, many times. This looks like a perfect A, B, C, D, and E. And the question is, where is the bottom of that E wave? Okay, bottom of the E wave could be in this support zone here, absolutely. Okay, oftentimes the B wave does follow, is indicative of following an descending, a falling wedge. It's the word I'm trying to come up with. Sorry, guys. Is indicative of a falling wedge, especially when you're expecting it to break to the upside. We came out from an uptrend. This is a correction from an uptrend, and we'd be expecting it to break out to the upside. Okay, so if that's the case, oftentimes it falls within a falling wedge. That's redundant, I know. Okay, so if let's zoom in here, and we say, okay, if this falls within a falling wedge, and I keep repeating myself here. Just kind of draw it out here. Then this would be our wedge. This would be our support. Okay, and yeah, that's very possible. You know, touched here, touched our wedge here. I think you could correct this C wave. There it is. So touched here, came in, touched here, and now we're looking for it to possibly touch the bottom of this zone here. That would make it, yes, that would make play out very well. So this would put the bottom, if this is accurate, this wedge is accurate, and it can come below this wedge, guys. I mean, it doesn't have to. Oftentimes we get a throw over. It doesn't invalidate the count at all, but, you know, let's just make a case. So this would put the floor somewhere around 5,800, somewhere around this prior low here. So that would set up a double bottom scenario where we double bottom and impulse right up. That'd be beautiful. The only problem that I have with this is this A wave here. If I, let's see, the A wave comes down to right here. This A wave ended here, so the A didn't touch the bottom of this wedge. And while it doesn't always have to, you kind of want it to, especially when you're looking at an A, B, C, D, E pattern, you know, especially that A wave, B, C, D, at least have to touch. The E wave kind of does its own thing because usually you're expecting a breakout. So I don't necessarily need it to touch with the E wave, but I would like the A wave to touch. Oftentimes, guys, this was clearly this wedge when it dropped down below back in, when was this, February, when price came down this low. This was a very quick drop to 5,800. You know, it was sitting somewhere around 6,900, somewhere thereabouts. Very quick drop right back up. So if I take liberty of this and I cut this wedge out, which oftentimes analysts will do, some people are completely opposed. Other analysts, they do this all the time. They cut the wedge out. In my opinion, it depends on how quickly, you know, this wedge took place, and in this case, or the wick took place. And in my opinion, this was a very quick drop right back up. You know, it was very, very, very quickly. So if I cut that wick off, and then I come out and I touch the bottom of this A wave, it lines up perfectly. We get a perfect touch here with A, perfect touch here on our C wave, perfect touch here on our C wave, and you know, is it going to come back down and perfectly touch here with our E wave and then impulse right back up? You know, in a perfect world, which we know technical analysis is not perfect, but you know, if you're drawing out, you know, if I was to draw an example of an ABCDE pattern, it would come down and touch the bottom of this wedge, this falling wedge, and impulse right back up. And we know a falling wedge is a very bullish pattern, whether it's coming off from a downtrend or an uptrend. A falling wedge is a very, very bullish pattern. So this would have, depending on where price does end, if we get sideways movement or if it does just keep coming straight down in a beeline, this would suggest that price is going to bounce somewhere at the bottom of this support zone, possibly even extending out here, and we could get an intersection between this wedge and this ascending support line here. So, you know, this suggests that price may come down into this support zone between 5775, 5450, somewhere thereabouts, and then we would expect an impulse up from there. So I don't say this to spread FUD to tell you that price has to drop much lower. It doesn't have to do anything, especially on this E wave. It can impulse up at any time, but it would make sense. It would be very technical for it to come lower. And, you know, don't view this as a bearish, look at this as a buying opportunity, guys. This is why I always tell you to keep fiat on the side. This would be, if price does end up coming this low, I will not be spending all of my money until I see price does, or I won't spend all of my money anyway, but I will not be going in heavy on any more long positions other than what I currently own in my long. I've got about 20% of my portfolio in longs. I will not sell them no matter what. But I won't add to that long position until I see price come down here. If price comes down in here, I'll start dollar cost averaging in to my long position, expecting a major bounce, especially if price ends up coming down to where this descending support descending support would cross with this ascending support. If we get that, we could expect a huge bounce if the timing works out that way. And it may not, guys. It may not. I'm just giving you possible scenarios to watch out for going forward in the future. So if we look out here, we check our moving averages, guys. Didn't mean to get off on a tangent, but I know some people have been asking me, so I wanted to clarify. Okay, this is the 4-hour chart. We can see price bounced off the lower Bollinger Bands here on the 4-hour, came back up. Hasn't been able to quite test this 8-day EMA. As I tell you guys all the time, we've got to get price north of this 8-day EMA before we're going to see any kind of bullish momentum. I should say that will be indicative of possible trend changes if we can get price north of this 8-day EMA to stay there for any period of time. That's how I should word it. If we come in here, we look at the daily chart. Price bounced off the lower Bollinger Bands here as well. Didn't get the bounce that we wanted to. Still nowhere near the 8-day EMA. Same thing, guys. We had the 8-day EMA cross over the 50-day moving average, very bearish. The 21-day moving average crossed below the 55, very, very bearish. I forgot to point out yesterday, guys, that we had on the 4-hour chart, we had the 50-day moving average cross below the 200-day moving average the other day on the 8th. Very, very bearish sign, guys. Obviously, that's been following through. So just bearish signs all around. If we come in here, we look at longs. Longs have been liquidated. They're continuing to be. No one's wanting to go long at this point. Everyone's waiting to see what's going to happen, and I can't blame them. We can see that our short positions continue to stack. We've had a little bit of a correction here within the last 12 hours, 12 to 16 hours, but nothing major. I would expect we might see another little bounce up here, guys. See short positions bring the price down a little bit lower, and then I expect the market makers to eventually go stop hunting here and just wipe out some of these short positions, at least temporarily, and then they may. What we might see is market makers drive the price down, hit this 5,800, liquidate shorts. Either shorts are going to take profit, or the market makers are going at that point drive price right back up, liquidate these short positions, only to drive it right back down and come crashing through this support zone down here. So anything could happen, guys, but these are just kind of the way that the market makers think. This is kind of, I want to get you in the head of how they're thinking, guys, to kind of protect yourselves so you know what to watch out for going forward, no matter what the scenario is. So anyway, guys, I'm going to go ahead and wrap it there. If you have any comments, questions, suggestions, please let me know in the comment section below. Until next time, guys, please trade safe. I always do appreciate an upvote or a re-steam or a like, depending on where you're viewing this. And until next time, guys, have a wonderful afternoon. This is Working, signing out.